Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Market's really kind of mixed here on the day. The S&P closing unchanged to just a tad bit higher here on the day at 1363 and 3/4 in the cash market. The NASDAQ closing a little bit higher as well. I think the news of the day and of the weekend really is looking at PMI manufacturing data really out from different parts of the world. Starting over the weekend, you had PMI manufacturing data out from China showing just barely holding on to expansion at 50.2, but probably the most troubling sign is when you dig into the numbers, the devil's in the details, when we look at new orders, exports and import numbers from the Chinese manufacturing sector, all below the 50 level, below 50 showing contraction, so that certainly has a lot of people concerned. Moving to Europe out with their PMI manufacturing numbers this morning as well, those showing a significant contraction just really for the 11th month in a row. But more troubling in that trend really is Germany, the real workhorse of the Eurozone economy, deteriorating rapidly in terms of those manufacturing numbers. And that's really troublesome because we're really relying on Germany at this point to be the country to look to bail everyone else out. So how's this going to play into the ECB's decision on Thursday, whether to raise rates or to cut rates or not? The consensus is we get a 25 basis point cut right now, but certainly this has to factor into their decision, and particularly with the German manufacturing sector falling quickly. On to the United States, our PMI manufacturing, wow. It was like having cold water thrown in your face on a day like today here in Chicago where it's really hot. Showing contraction at 47.9. First time in 3 years we've seen any type of contraction in manufacturing data. Again, very troubling, digging into the details. New orders shrinking, and also prices paid shrinking within the PMI manufacturing. So what's that say? Well, that says that margins at manufacturing companies are probably being squeezed in the earnings outlook for the Q2 season, which is coming up here next week. We might see margin contraction for companies. So what I would say is, when we look at what the bond market did today, the bond market actually, bonds trading higher, so yields trading lower, but virtually unchanged on the equities. To me, valuations on equities probably remain a little rich right here. 1350 in the S&P, certainly a big support, but we could see further downside from there, particularly with this type of data, manufacturing data, and the sub-indices showing contraction, particularly as we move forward in the coming months. Please give me a call, 888-596-5817. We can discuss these opportunities and others. And as always, futures trading is not for everyone and does carry a great degree of risk. Please give me a call, 888-596-5817.